Okay, we have a cash dividends here that we're looking at, and ABC Company earned net income of $85,000. On December 15th, they declared annual cash dividend on its 4% preferred stock with a par value of $120,000 and a 25-cent per share cash dividend on common stock, of which they had 50,000 shares. And then they declared it on December 15th. They then paid it on January 4th of the next year. So what we've got to do here is journalize the entry declaring the cash dividends and then journalize the entry paying the cash dividends. So on 12/5 is the date in question, or 12/15, we are declaring the dividend. So we've got to calculate these things here, and on its preferred dividend, it's 4%. Our par value is 120,000. So if we multiply this by 0.04, we get 4,800. So there's our preferred. And then for common, we have 50,000 shares, and we are paying 25 cents per share. So if we multiply that, we get 12,500. This is common. So if we add these up, the 12,500 plus the 4,800, we'll get 17,300. So when we go ahead and we're going to declare these dividends, we're actually creating a liability. The business is promising to pay these amounts at a future date. So basically we're looking at this, and normally we might think of this as just a dividend, but we're going to be looking at stock dividends as well. So we need to differentiate this, and the way we're going to do that is just debit cash dividends, signifying that these dividends are paid in cash. These aren't stock dividends, anything else but cash, and the amount is $17,300. That's our debit. Our credit, we have to, again, we're going to differentiate on these payables between preferred and common stock. So we would have dividends payable for common stock, and our common stock is 12,500, a liability, and normal balance on the credit side. And our dividends payable for preferred stock, which is the 4,800. So there's on 12/15 where we have the journalization for declaring the dividends. Now in the next year, which is 2019, they were paying the dividends on January 4th. So on 1/4 of the next year of 2019, we are essentially fulfilling our liabilities here. So we will debit our dividends payable for common stock, and the amount on common was 12,500. And we'll also debit our dividends payable on preferred stock for 4,800. And now, since we're paying them, we get to credit our cash for the amount of $17,300. So cash dividends, this is what we're looking at in case when we're paying them. Remember, when we're declaring them, there is no cash going anywhere. We're only looking at cash when the dividends are actually paid. So again, practice your accounting, and I will see you next video. Bye.